Being successful is not about being perfect, it's about being better than you were yesterday. So every trade is an opportunity to learn, adapt, and grow. There's a popular quote that says, "Losers focus on losses, while winners focus on the next trade." Now, we are going to prove to ourselves that we belong to the category of winners by unlocking the secret of profitable trading with a simple guide to identify top performing cryptocurrencies and then discover how to decode candlestick patterns and then use that candlestick patterns to maximize opportunities and also spot breakout opportunities using the 24 hours high and low indicator. So a lot of people, have been coming to me, despite knowing or having the knowledge on how to analyze the market, they still find it difficult to choose the suitable asset that they can easily trade with by buying low and selling high in the short period of time. All right, to make profit, of course. The first thing to consider, guys, the first thing to consider when looking for an asset or a suitable coin to trade with is the volume. The volume, guys, the volume, okay? The volume of the coin. The crypto asset has, if a crypto asset has a significantly high volume, then it is considered to be a suitable asset. So, for those of us that don't know what volume is the total amount of trading activities, okay, or trading transactions that occurs on a specific cryptocurrency exchange within a specific period of time. Let me repeat this again, this time around slowly. Volume is the total amount of trading activity, which is buy or sell, or buy and sell. The total amount of trading activity or a transaction that occurs, okay, on a specific cryptocurrency exchange within a specific period of time. So, in other words, it can be defined as the summation, the total sum of the value of buy and sell orders executed on that cryptocurrency within a particular time. Let me give you an example outside of cryptocurrency. Now, just imagine that I have a restaurant, okay? So people come to buy food from me, and then vegetable vegetable sellers come to sell vegetables for me. So technically, I sell food and I buy food items, all right? So I made a total sell, okay? Sorry, I made a total sale, okay, of let's say $1,000. Okay, so I sold food worth of $1,000 and I bought vegetable worth of $400 within a particular day, within just today. So that means I have made a total sale of $1,400, both my buy and sell. So $1,400 is my volume within that day. I hope you understand what volume is now. So the reason why I told you that volume is important, is very important in determining a suitable asset to trade with, is because the higher the volume, the higher the liquidity. So high volume means high liquidity. So liquidity refers to the ability to buy or sell a crypto asset quickly and easily without having to wait or hold the coin for longer than you've planned to hold the coin. All right, and without affecting the value of that crypto asset. Let me give you another example. Okay, so just take for instance now that I sell ice cream. Okay, let me just use ice cream. I sell ice cream, okay, and my friend also sells ice cream. All right, so but I have ice cream currently worth of $1,000, and my friend has ice cream worth of $1,000 too. But I sold my ice cream of $1,000 within just 1 hour, while it took my friend to sell his ice cream of $1,000 within 4 hours. So I sold quicker than him without even tampering with my price, without having to put my price down. Maybe I'm selling strawberry ice cream and he's selling chocolate ice cream. So that means people want to buy strawberry ice cream at that point in time over strawberry ice cream, over his chocolate ice cream. That was why it was easy for me to actually sell everything, liquidate everything, okay, before him. So that is just what liquidity is: the ability to buy and sell an asset without tampering with the price very quickly and very easily. Okay, so when the volume is high, liquidity is high, because volume means more buying and selling. So liquidity has to be high. Okay, so that's just what liquidity is. So generally, if a crypto coin has $1 to $10 million in volume, okay, if a crypto coin has $1 to $10 million in volume, then that crypto asset is considered to have a relatively low volume. Okay, So that's relatively low volume will lead to low liquidity. So I don't advise that you you invest in a coin that has $1 to $10 million worth of volume, because it can be manipulated. Okay, there are some giant tech tech firms and all those big men that can just come to the market and just pump a particular coin with $5 million, $8 million to actually make the price go high, and people start seeing the price going high and then begin to invest, only for the giant companies and individuals to try to make the coin go up a bit and then sell it on a market order to actually get profit, while we are going to be on the loss. So $1 to $10 million is a red flag when choosing a suitable assets to trade with. So the second category is the $10 to $50 million worth of assets. So what of volume, sorry. So $10 to $50 million is considered to be a medium volume, resulting to a medium liquidity. So one can trade with these coins and they are considered to be safe, okay, with this volume specification. So and finally, there's the 50 million to 100 million or more, and this 50 million, 100 million or more is considered as high volume, thus resulting to high liquidity. So whenever you trade using this types of currencies, mostly found on the hot section, just as you can see right here, okay, this is Binance and this is how the interface looks. And as usual, we have the favorites, we have the hot, gainers, losers, and new listed. So the most traded tokens, okay, the trending tokens can be found on the hot section over here. And today the trending tokens are BNB, BTC, Ethereum, PAPE, Doge, Solana, and if you click on this more, you're going to see more trending tokens. So normally, if you want to have coins, or if you want to trade on coins that have high volume, you just have to come to the hot section and then pick a coin of your choice. All right. Secondly, we can determine the entry and exit of a trade by identifying a specific candlestick pattern. Okay, so there are specific candlestick patterns that determines whether the market will go up or not. But since we are discussing about spot trading, the money is made in spots. The money is made only when the market is going up. All right. Since we know this, then we are only going to talk about the candlesticks that indicate a buying momentum. So the first candlestick I'm going to talk about in this video is the bullish engulfing candlestick. The bullish engulfing candlestick. So let me show you what a bullish engulfing candlestick is. So I'm just going to use one of these coins over here. Let me go with Doge. This one. Let me go with Doge. So I'll just click on it and it's going to bring me to an interface where I'm going to see the candlestick and the price and the time frame and so on and so forth. So as you can see right here, this is the 15, let me indicate. This is the 15 minutes time frame. So that means that each candle over here represents 15 minutes of activity of Doge token. Okay, so the red candles, as we all know, the sell is the sell candle. Okay, it means that price went down, and the green candle is the buy candle, meaning that price went up. So what are we looking for here? We are looking for the bullish engulfing candlestick. So how can we determine if a candlestick is a bullish engulfing candlestick? All right, let me tell you what a bullish engulfing candlestick is. So the bullish engulfing candlestick comprises of two candles, a red candle and a green candle. Okay, so the red candle comes first and the candle must be red. So the first one must be red candle and the second one must be a green candle. And the red candle is definitely going to be shorter in body and wick than the green candle that follows it. So let me show you what the candlestick body is and what the wick is. All right, so this thick green place over here is referred to as the body of the candlestick, and this thin line over here is the wick of the candlestick. So the wick is formed if the candlestick goes up. So there's when you see a candlestick has a wick, that it's telling you that there was a point in time that this candle actually went as high as this place over here, but due to seller's pressure it has to come down a bit to this level that it is right here. And the lower wick here indicates that this candle, this green candle we are talking about over here, there was a point in time that this green candle actually came as low as this place, but then the buyers actually pushed it up a little bit. So the current price of this candlestick is at this place right now. All right, so this is the body and this is the wick. So the thick part is the body and the thin line above and below are the wicks. All right, so we said that the body of the green one has to be longer or bigger than the body of the red one, which was the first one, and then the wick also has to be taller than the wick of the first one. So let's see if we can be able to find a bullish engulfing candlestick over here. I think I found one. So guys, this is a bullish engulfing candlestick right here. All right, as you can see, this one, the place the arrow is pointing is a red candlestick, and this other one right here is a green candlestick. And this red candlestick here is actually shorter than this green candlestick here, and the wick of the red candlestick is actually shorter than the wick of the than the body of the green candlestick. So one of the rule of identifying a bullish engulfing candlestick is that the green candle that forms after the red candle must automatically engulf, which means it must cover the body and the wick of the red candle. So if you see that, that means that the candlestick is a bullish engulfing, and the close of the red candle must be shorter than the open, okay, than the close of the green candle. So what I mean by close of the red candle is that, you see, the red candlestick here closed somewhere here. Let me indicate it. It's closed somewhere here. All right, so as you can see, after it closes, this green candlestick over here came down to this point where the lower wick is, but then went as high as this point over here. So that means that the body of this green candlestick went above the body of the red candlestick and also the wick of the red candlestick. So after finding out all this, it is certified that this is a bullish engulfing candlestick. All right, so if you find this, or whenever you see this, that means that the market is actually going to go up. And what happened, guys? The market actually went up. Okay, the market actually went up, came down a bit, and continued to go up. Okay, so that means that this candlestick is a legit candlestick. All right, so the second bullish indicator candlestick we'll talk about is the hammer candlestick. So the hammer is a bullish reversal pattern, and the hammer candlestick forms when the market is on a downtrend, meaning that when the sellers have dragged the coin down significantly. Let me repeat this. The hammer candlestick forms when the market is on a downtrend, meaning that when the sellers have dragged the coin down significantly. All right, so let me find a hammer. Okay, I think I found one. This is a hammer over here. These are all hammers, the green and the red one. Let me see if I can see another one that is going to suit our explanation. So this is another hammer over here. Over here, this is another hammer. Although it looks like a morning star, there's a candle called a morning star. And this is perfect. I've seen a very good hammer. This one over here, this green candle. So a hammer can be either red or green. Okay, so let me tell you the specification of identifying what a hammer candlestick looks like. Okay, so the hammer candlestick opens and then significantly drops during a trading period. It opens and then significantly drops. Remember, I told you that if you see a longer wick, then that means this is the wick over here. All right, so if you see a long thin line, that means that there was a point in time when the price of that asset, okay, at that time when the candle was forming, went as low as this level over here, and then it has to go up a bit. Okay, it has to go above. All right, and it actually went above the initial price that the other candlestick closed on. So when you see this, it is an indication that this is a hammer. And another indication is that when the candlestick goes back up, it closes. Okay, it closes just below the position where it's opened. Okay, and it forms a longer lower wick and a shorter upper wick. And as you can see, this hammer candlestick right here has little to no wick on top of it, and the body is usually 2 times or 3 times the wick. Okay, sorry. The wick of the candlestick is usually 2 or 3 times longer than the body. And as you can see, this candle that these arrows are pointing, you can be able to fit the body of this candlestick twice at least into the wick, okay, the lower wick. So when you get this, it is an indication that the market is actually going to go up sooner or later. So this candlestick is an interpretation. Okay, so the interpretation to this is that the buyers pushed it backwards to gain control. When the sellers actually moved the market down, the buyers have to push the price up a bit to get the control of the market. So whenever you see this candlestick, it is an indication that the market is actually going to go up, and behold, the market went up. Right, so this is another candlestick. There are various candlesticks that actually indicate a buy signal. So in our next videos, we're going to talk about them because I don't want this video to get so long. All right. Now, the third and last part of identifying or choosing a suitable asset is by using the 24 hours high and low indicator. All right. So this is done by switching your time frame to the 1 day candle stick. Sorry, 1 day time frame. So this is where the time frame is. Right here. Okay, as you can see, we have the 15 minutes, 1 hour, 4 hour, 1 day, and there's more. So if you click on this more over here, you'll see other suitable time frames. So they say that we should put it at the 1 day. All right, so I'll just click on the 1 day. All right, and it's going to bring us to this place where you see the chart of the 1 day. So each candlestick over here represents 1 day of activity. Each candlestick over here represents 1 day of activity. All right, so what I mean is that the candle doesn't form until after 1 day. This candle forms after 24 hours. This one also formed after 24 hours. This one, so and so on and so forth. All right, so after we switch it to the 1 day, the reason why we're going to switch it to the 1 day is because we want to clear out false signals. There are times where the market is going to go rapidly down and come up, and if it's on a lower time frame, it's just going to give us false signals, making us to not know where the trend is actually going. So after putting it on the 1 day, just like this, the next thing we're going to do is to zoom out the chart to observe the direction of at least 7 days, of the last 7 days. So just zoom it out a bit, although this one has been properly zoomed out. Okay, so we count 7 backwards, starting from here, the last one, 1, 2, 3, 4, 5, 6, 7. All right, so starting from this place, and they say we should zoom it out. We have done it. The next thing is to actually hold the candlestick just the way I held this one right now. So you hold the candlestick. I'm going to tell you why you're going to hold it. Hold the candlestick and then see the significant difference. Okay, difference between the high and the low of the candlestick within that particular day. So if you can see the volume, sorry, the information about this candlestick is at the left side of my screen. Okay, it's opened at 0.11138. This is not what we're after. We're just after the high and the low. So it went as high as 0.1121 and went as low as 0.1086. So this is an indication that the difference between the high and low is significant. So also this one, the significant difference, this one. So it is actually telling us that there's significant difference every single day. So first of all, it is an upward trend. Secondly, the upward trend has a significant difference between the highs and the low. All right. So the next thing you are going to actually consider is that even if the candlestick that's going to form next is going down, it should never go down below the previous candlestick that formed. What I mean is, take for instance this candlestick right here, this one. All right. So take for instance this candlestick. The next one that formed after it is over here, and the wick went down, but it never went down below the previous one. This is just what I'm talking about. And this other one went down, but it never went down below this one. All right, so it should never go down below the previous candle that was formed, even if it's gonna go back up, but it should not go down below the body and wick of the previous candle. All right, these are all indications that might tell you, or that is going to give you an insight that this market is actually on a continuous bullish movement. And lastly, the 24 hours and 24 hours high and 24 hours low, which can be spotted right here. All right, so over here, all you have to do is that you should look at the significant difference between the 24 hours high and 24 hours low. Okay, so here the 24 hours low is telling us that it's at 0.1336, and then the 24 hours high is at 0.14700. Okay, so we have seen that there's significant difference. The next thing we have to check is that the difference between the current price, which is here 0.1443, is not as much as the difference between the all-time high. Okay, so the difference between the current market price, okay, which is over here, should be lower than the difference between the current price and 24 hours low. Let me explain it slowly so that you can understand. It's a bit tricky over here. I said, lastly, check the significant difference between the 24 hours high and 24 hours low. Okay, and then make sure that the difference between the 24 hours high of the asset and the current price is lesser than the difference between the 24 hours low of the asset and the current price. So the difference between, let me clear all this, the difference between this price and the current price should be lower than the difference between this price, current price, and the 24 hours low. So if the difference between the 24 hours high and the current price is not as much as the difference between the current price, okay, and the 24 hours low, then that means that the coin is still aiming to go above its current price or go above the 24 hours high that it already has. Okay, so this is just what I am talking about. I hope you've gained something out of this. And guys, like I always used to tell you, trading is not easy. If it was easy, everybody will do it. But with focus, consistency, and putting your mindset, okay, to the right place, I promise you guys, this is all going to be a history for you, because once you learn it, you cannot unlearn it. That is just one thing about trading. And I keep telling you guys this: trading is 90% patience. 90% patience. You have to learn how to kill your emotion if you are trading. Do not get scared because the market is going down. This is not futures. Futures gets an asset to get liquidated. This is spot. The market will surely bounce up. Okay, with the proper analysis, you won't have to hold the coin for a longer period of time. So guys, please kill your emotion when trading. Trading is 90% patience and then 5% strategy. And when you're trading, do not focus on the profits, guys. Do not focus on your profit. Focus on mastering the strategy you are using. Focus on finding out the mistakes, correcting them, okay? Finding out your flaws and correcting them in the future. Because if you have experts yourself on the strategy, the profit comes automatically. I hope I'm clear. I hope you understand what I mean. So I hope this helps, and I hope you have a nice day. Ciao.
Don't doubt your own ability. We've all got to deal with the enemy of doubt. I'm asking you, don't let that disease grab you by the throat. You can make it through. You can go through those strenuous times. If I can make it, you can make it.